The stock market is on a roller coaster right now. It's scary and confusing, but there's one investor who always seems to know what he's doing: Warren Buffett.
Let's take Warren Buffett of Omaha, Nebraska. If you had put $10,000 in 1965 into his company, Berkshire Hathaway, you would have $1 million today.
With decades of experience and a proven track record, Buffett has become a beacon of wisdom for navigating turbulent markets. Today, we're diving into his playbook to uncover the secrets of investing during a market crash. We'll explore his timeless advice, analyze his recent moves, and discover how you can apply his strategies to protect and grow your wealth. At the core of Warren Buffett's investing philosophy is a simple yet profound principle: be fearful when others are greedy, and be greedy when others are fearful. End quote. This counterintuitive approach has been the cornerstone of his extraordinary success. While most investors end up buying high while stocks rise and panic sell off when stocks drop, Buffett does nearly the opposite. Today's market is undoubtedly characterized by fear. Headlines are filled with economic uncertainties and investor confidence is shaky. This atmosphere bears striking similarities to the 2008 financial crisis, another period marked by extreme market volatility. To gauge the level of fear in the market, investors often look to the VIX, or the Volatility Index. It's essentially a fear gauge, measuring market expectations of volatility over the next 30 days. A high VIX indicates heightened fear and uncertainty. The VIX skyrocketed to an unprecedented high of 65 on the morning of August 5th. This marked the largest intraday spike in the index ever recorded. It's important to note that such extreme levels were previously seen only during the 2008 financial crisis and the early days of the COVID-19 pandemic.
Next here, this is the worst trading day for stock markets in nearly 2 years. In the early minutes of the session today, we saw around $1 trillion worth of wealth wiped off.
The idea of buying stocks when prices are plummeting is counterintuitive for most investors. Our natural inclination is to protect our money by selling when the market is falling. This is a perfectly understandable reaction driven by fear of losing money. However, this emotional response can often lead to poor investment decisions. When the market crashes, it's like a massive sale on high-quality goods. Prices for stocks of fundamentally sound companies can become significantly undervalued. This presents a unique opportunity for savvy investors to acquire assets at discounted prices.
Point 400 points higher. Yes, indeed. The markets roar higher last 30 minutes of trading as volatility once again rules the day.
Warren Buffett has witnessed and profited from multiple market downturns. His ability to remain calm and focused during these periods of chaos has been instrumental to his success. The 1973 to 1974 stock market crash, the dot-com bubble burst in the early 2000s, and the 2008 financial crisis are just a few examples of market turmoil that Buffett navigated with exceptional skill. By staying true to his value investing principles and focusing on the long term, Buffett has consistently turned market crashes into opportunities to build wealth. His track record serves as a testament to the power of disciplined investing during challenging times. While market sentiment plays a crucial role in driving short-term stock price movements, economic fundamentals are the bedrock of long-term investment success. Economic indicators provide valuable insights into the overall health of the economy and can influence investor behavior. For instance, a strong gross domestic product (GDP) growth rate typically correlates with rising corporate profits and stock prices. Conversely, a slowing economy, often indicated by rising unemployment rates and declining consumer spending, can put downward pressure on stock prices. It's important to note that the relationship between economic indicators and the stock market isn't always straightforward. The market often anticipates economic trends, so stock prices may start to rise before economic data improves. Additionally, other factors like interest rates, geopolitical events, and industry-specific developments can also impact stock prices. Beyond his investing acumen, Warren Buffett possesses several personal qualities that have contributed significantly to his success. Patience is perhaps his most defining characteristic. He's often quoted saying, quote, "Our favorite holding period is forever," end quote. This long-term perspective allows him to weather market storms without panic. Discipline is another key attribute. Buffett sticks to his investment principles, resisting the temptation to chase short-term gains or succumb to market hype. His ability to focus on a few high-quality companies rather than spreading investments too thin has been a hallmark of his strategy. Understanding investor psychology is crucial for making sound investment decisions. Fear and greed are two powerful emotions that can drive irrational behavior during market crashes. Fear can lead to panic selling, while greed can tempt investors to chase hot stocks. It's essential to recognize these emotions and develop strategies to manage them. Emotional decision-making often leads to poor outcomes. By staying disciplined and focused on the long term, investors can mitigate the impact of these psychological biases. Diversification is a fundamental principle of risk management. By spreading investments across different asset classes, industries, and geographic regions, investors can reduce the impact of any single investment's performance on their overall portfolio. While it's impossible to eliminate risk entirely, diversification helps to smooth out returns over time. A well-diversified portfolio can help protect investors from significant losses during market downturns. Remember, diversification doesn't guarantee profits, but it can help manage risk. To truly understand Buffett's investment philosophy in action, it's essential to examine his recent moves. Berkshire Hathaway, the investment vehicle through which Buffett operates, has made several significant acquisitions and investments in recent years. Notable purchases including a list of recent acquisitions and investments such as Occidental Petroleum, Apple, and others. These strategic moves demonstrate Buffett's belief in the long-term prospects of these companies and their ability to generate substantial returns for Berkshire Hathaway shareholders. Buffett's buying activity during periods of market downturn sends a powerful message to other investors. His willingness to invest significant sums of money when others are fearful can help to stabilize the market and boost investor confidence. Additionally, Buffett's focus on high-quality companies with strong competitive advantages aligns with his value investing principles. By acquiring or investing in such companies, he's effectively putting his money where his mouth is, reinforcing his belief in the long-term potential of the market. However, it's important to remember that past performance is not indicative of future results. While Buffett's track record is impressive, investing always carries risks. Warren Buffett's investing philosophy is a testament to the power of patience, discipline, and long-term thinking. By embracing a contrarian approach and focusing on high-quality businesses, he has consistently outperformed the market over the decades. Remember, investing involves risk, and there's no guarantee of future success. It's essential to conduct thorough research and consider your own financial goals before making any investment decisions. While Buffett's strategies have proven successful, it's important to find an investment approach that aligns with your personal risk tolerance and time horizon. By understanding the principles outlined in this video and applying them wisely, you can increase your chances of achieving financial success. Investing in the stock market can be a rewarding journey. By following the wisdom of Warren Buffett and adopting a long-term perspective, you can navigate market fluctuations with confidence and build a solid financial future. Don't forget to hit that like button if you found this video helpful, and subscribe to our channel for more investing tips and insights.